Do you want to make a lot of money fast? Are you looking to retire early or work from home? Then let's hope you win the lottery soon, because 99 to 96% of day traders lose money. Day trading is not the solution. You might be thinking that 99 to 96% is way too high, and what I'm saying is untrue. You might be remembering the people on the internet who told you they made lots of money day trading. We all know that we can trust everything we see online or hear from a friend, so that seems rock solid. But let me show you some numbers based on actual research. In this video, we will review the real success rates of day trading, why people continue to day trade despite losing money, and what you can do as a much more profitable alternative. Day trading is buying and selling stocks in a short time frame, typically within the same day using technical analysis and other techniques. In a study conducted on day traders in Taiwan, they found in a typical 6-month period, more than 8 out of 10 day traders lose money, and only about 1% of all day traders are able to predictably profit net of fees. The authors concluded only a select few are sufficiently savvy to consistently earn profits net of their trading costs. Now you might be telling yourself, I'm not trading in Taiwan, that doesn't apply to me. Okay, well let's take a look at a study on Brazilian day traders. The authors found that over a 300-day period, 97% of them lost money, only 0.4% earned more than a bank teller, and the top individual earned only $310 per day with great risk. Some of you are still telling yourself that because you're not investing on a Taiwanese or Brazilian exchange, you're somehow a special trader. However, a study of US investors found the average individual investor underperforms the market index by 1.5% per year. Active traders underperform by 6.5% annually. The same study found men trade more than women, and as a result, the returns earned by men are lower than the returns earned by women, and that day traders underperformed investors who employed a buy and hold strategy by about a third. Another examination of day traders found that only 3.5 to 4.5% were successful, meaning approximately 96% were unsuccessful. In another study, profitable day traders made up 1.6% of all day traders in the average year. 1.6% is a terrible rate, but it's also terrible if you don't hit the like button, so please take a moment to hit it. Videos like this do take a lot of time to research and to create, and hitting that button will help the YouTube algorithm get this video out to help more people who are interested. 80% of all day traders quit within the first 2 years, and yet research has found traders with up to a 10-year negative track record continue to trade. This suggests that day traders continue to trade, even though they should know they do not have the ability to do so successfully. Now, to be fair, I also found a study which showed 77% of day trading accounts examined were found to have net losses with an average net loss of $36,435. 9 of the accounts had losses over $100,000, with one losing $641,000. The good news for you aspiring traders is that means 23% of the accounts managed to not lose money. However, given that most studies found that 96 to 99% lost money, the smaller study in which most people still lost a large amount of money is not particularly optimistic. So, based on this research, what do we know about day traders? The vast majority of day traders are unprofitable, and many persist despite extensive losses. If so few people can make money from day trading long term, why do so many people do it? Consider this. Trading in Taiwan dropped by about 25% when a lottery was introduced in April 2002. Researchers found that during periods with unusually large lottery jackpots, individual investors' trading declined even further. Research has also found that investors with a large differential between their existing economic conditions and their aspiration levels held riskier stocks in their portfolios. In other words, many day traders are the same people who tend to gamble and buy lottery tickets. For many, day trading is just another get-rich-quick scheme. Adding to this pursuit of high-risk gambling by many day traders hoping to be instant millionaires is the Dunning-Kruger effect. The Dunning-Kruger effect is a psychological bias in which people with low ability at a task overestimate their ability. They don't have the knowledge and skill to recognize how poor their ability is and don't evaluate their performance well. If you are a day trader or hoping to begin soon, you will likely be subject to this bias. You will be overconfident in your ability, believe you are better than you are, won't accurately assess your performance, and will lose money. Worst of all, because of your poor assessment of your performance, you may continue to day trade and lose money well past the first several failures which should have taught you something. Now, if you're watching this video around the time this video was made on April 10th, you could be thinking, are you kidding? I'm an amazing trader. I started investing 2 weeks ago and I'm up 200% on my trades. Yes, you just started when the markets were swinging back up. 2 weeks of success or a few lucky trades does not mean you are in that 1% of profitable traders. Look at this chart. 40% quit after only 1 month and 80% quit within the first 2 years. Many of them had early successes, but finished with losses. True investing is slow and can be boring. It takes a great deal of time. It is methodical, calculated, and thoughtful. For someone with a need for entertainment and excitement and the dream of quickly becoming a millionaire, the idea of dividend growth investing or value investing will be less attractive. If you enjoy the rush of gambling or day trading, you can use 1 to 5% of your portfolio to day trade. Just remember to invest the remainder of your portfolio in a reliable strategy. And for what it's worth, if you're going to gamble with your money, you might as well do it in Vegas. It'll be a lot more fun when you lose it all. Now, I'm not saying day trading is impossible and it can't be done. It can. 1 to 4% do so, mostly with small profits. However, I can tell you, the viewer, you will fail to make money on day trading, and I will be right 99 to 96% of the time. If I'm 99 to 96% confident you will lose money, how confident are you? If you said anything below 96%, rewatch the part of this video on the Dunning-Kruger effect. So, if you're new to investing and day trading seems like a poor decision to you by now, what should you do instead? There's a lot of reasonable strategies. Value investing, buy and hold investing, dividend growth investing, or index investing. I am not here to tell you what the best choice for you is. However, if you want to start right away and without a great deal of research and planning, index investing is the easiest way to get started and requires the least homework and oversight. You invest in one or more index funds like VU, QQQ, DGROW, or Noble, and never sell until you're closer to retirement. You continue to add money weekly or monthly or whatever works best for you. Although day trading consistently loses to the markets, when you buy a fund like VU, your investment is the market. If you bought a NASDAQ index fund at the very beginning in 2002, your investment would be up about 620%. Unlike day trading, everyone who started investing then gets that 620%. 100% of investors who did that made 620%. That's much better than the high risk, low reward of day trading. If you bought the very bottom of the recession, you would be up 1,852%. Now, timing the bottom is rare, so let's just pick a random point in the middle here. You and all the other investors who invested then would still be up about 524%. Unlike day trading, you didn't have to put in hours of work. You just needed to put some money into a NASDAQ fund that day and forget about it until today. It's easy, manageable, and convenient. No, you're not going to become a millionaire overnight, but you weren't going to with day trading either. Slow and steady wins the race. As Warren Buffett wisely said, the stock market is a device for transferring money from the impatient to the patient. Choose which one you want to be. If you have experience with day trading or know others who do, what has your experience been so far? Leave a comment below, I'd love to hear from you. Also, please subscribe to this channel because I will be creating new videos on better alternatives to day trading. As always, good luck with your investing.